A very good afternoon to all friends. I am Sanjeev Singhal, Central Council Member, Chairman, Auditing and Assurance Standard Board. I welcome you all to this 146th program of AASB for this council year. And today's topic is the key consideration in audit of LLPs. Friends, there are about 14 lakh companies in India, and the number of LLPs may be less, but as of now, but the number of LLPs are increasing, and these are a popular form of organization. The audit consideration for LLPs remains more or less same. However, there at some places there is a different angle which comes into the picture. And from the Auditing Standard Board, we have also issued an exposure draft for the auditing standard that are applicable to the LLP. Largely, the auditing standards are same. There could be some differences, which could be the difference in the application of law. To take up this discussion, we have three very esteemed members of our profession. CA Jimmy Mittalji, the very good friend and a vice chairman of the Bathinda branch of NIRC of ICI, who's a moderator, always a smiling face. You can see Jimmy Bhai comes from a very vibrant place, Bathinda, from Punjab. And then we have another moderator, CA Sunil Gargji.
Thank you, sir.
Source person of Auditing and Assurance Standard Board, the primary author of this checklist on the auditing standard, which is issued by the Auditing and Assurance Standard Board. And our keynote speaker, the star faculty for the day is CA Raisuddin Sefi. So all the three members are great contributor to our profession, and we need more and more of Sunilji, Jimmy, and Raisuddinji, who are always available, who are always only calls away. So I thank all the three, and I would be requesting Jimmy Bhai and Sunil Bhai to act as moderator, and then also invite Raisuddinji to deliver his address, and then also take up the questions which are asked by our esteemed participants. So may I request Jimmy Bhai for his opening remarks, and then Sunilji, and then finally invite Raisuddinji. Over to you, Jimmy Bhai.
सुनील जी आप करिए स्टार्ट, मेरे पास इंट्रोडक्शन है सर.
अच्छा, मेरे पास भी इंट्रोडक्शन तो नहीं है इनका. अनिल जी.
Good evening, sir. Sir, kindly I request Honorable Vice Chairman of Bathinda branch to kindly introduce the speaker, sir.
Okay, ठीक sir. Sir, first of all, good evening to all the members, and I am here to introduce our today's guest speaker, CA Raisuddin Sefi ji. CA Raisuddin Sefi is an associate director of the Assurance Division of ASA. The organization has 8 offices with 1,000 plus team members. He is a chartered accountant with over 12 years of post-qualification experience. He is also a commerce graduate from Delhi University. In-depth understanding of Indian accounting standards, previous accounting standards, auditing and assurance standards, guidance notes, and their respective applications. Sound experience in various central and state-owned companies and PSUs in the diversified sectors such as textile, insurance, banking, power, oil and gas, education, IT and fertilizer, etc. Apart from India's IFRS transition and advisory, he has experience working on audits including PCAOB audits, risk advisory assignments, management audits, valuation, internal financial control implementation assignments. Proficient in tracking all regulatory changes affecting the industry. He is the chairman of subcommittee on technical development of the firm. So this is a brief introduction of CA Raisuddin Sefi. Sir, welcome in today's seminar, and you are the guest speaker. And again, sir, thank you all members. Sir, please, sir, continue, kare, sir.
Okay. Thank you, Jimmy ji. Thank you, Sanjeev ji and Sunil bhai and the entire team of AASB for giving me this opportunity. And it's always my honor and privilege to come and speak in such type of very interesting webinars. arranged by the AASB. I think lots of webinars were conducted last year, and since today is technically the second January, but the first working day for the professionals, because yesterday was majority were on leave. So we start with the technical learning only. So usually people say when we start the first day of the year with the different things, so that goes around the year. So WSB set the tone because today they started, giving the training to the professionals. So, Jimmy bhai, so the objective, as Sanjeev ji mentioned, as you explained, so the objective of today's webinar is not just to pass on the information from my side. This would be like two-way. We all are professionals, so we'll share the knowledge, and I'll try to justify the 2 hours time because professionals are connected to learn, unlearn, and refresh our knowledge. I'm sure everyone is aware about the concept of LLPs, but yes, it's time to refresh our knowledge and go in depth in next 2 hours. So before this, I'll just quickly share my screen. Okay. So is it visible?
Yes, sir. Make it full screen, sir. Yes, sir.
Yes, sir. Visible.
Visible.
Okay. So thank you, friends, for joining us for today's webinar. And today we'll discuss the key considerations regarding the audit of limited liability partnership, which abbreviated word we use, the LLPs. And this goes around 1 hour 45 minutes. We'll try to cover up the critical aspects and discuss in detail. Hello? Hello?
Yes, sir. Sir,
Okay.
PPT is not visible.
Just a second. Maybe screen is.
स्क्रीन तो चल रही है आपकी.
It's visible now?
ठीक है, अब ठीक है.
Yes, sir.
ठीक है जी, विजिबल है सर.
Okay. So you can see the photo or the image, the pictorial animated image on my screen. So, last week I was just having a look, and so this photo came into my picture, and I thought I should share with the fellow members here. So they are thinking this is the group. I'll connect with the audit group, like the audit engagement team. They are thinking like, what if we do not change at all and something magical just happens, right? There are lots of things happening. AAS is working very hard towards to align with the global aspect. Recently the guidance not on financial statements of LLPs was launched by the ICI, and recently the exposure draft on standards on auditing was issued, which is still available for the comments by the professionals. And there are lots of changes happening, like the AI, blockchain, and the machine learning. The IT teams also working towards digitization of the audit process. There are dedicated corporates who are working for the audit tools, right? So this is the high time that we need to work upon the change and manage this change, right? And there is no shortcut to manage this change. We have to learn each and every aspect, and the learning is the only solution that we can manage this change. Otherwise, we'll be there, but we'll be out of the league, right? We'll remain in the picture, but not the relevant. So with this, I have a quote to share. Mr. Bill Clinton once said, the price of doing the same old things is far higher than the price of change. Means if we are doing the audit from the, old mindset and we are not keeping our skilling up, then there are high chance that the requirement of or the objective of the standards on auditing and the accounting standard may not meet the may not be that adequate, or in case we are not uh, using the new technologies, we are not working on the recent publications issued by the ICAI, and we are not aligning us with the recent observations or the reviews issued by the regulators also, though those are not applicable on LLPs. For example, LEFRA is issuing the reports for the companies, but these kind of observations may be applicable in the LLPs also. So we need to manage this change by way of learning only. So today's PPT or the presentation is divided in 6 parts. First, we will understand the basics. Then we'll have the introduction about the structure of LLP first, and what are the standards applicable on LLPs. Then focus on key audit considerations. And if time permits, we'll have the practical case studies to connect the concept what we have recap today. Okay. So here, first question in my mind, because this is webinar, so that I thought like I put the questions in a slide and ask these questions on your behalf and answer. So first question in my mind comes like, is audit of LLP mandatory? Because it's not a company, right? So if it's not a company, like in companies, the audit is compulsory. There is no threshold limit that we have to follow. Like the particular limit is required to comply with the audit, like we do in the tax audits. So is there any threshold required for the audit of a LLP? So answer is yes. If there are threshold defined in the LLP Act 2008 by way of the rules defined there, that the 40 lakhs is the turnover criteria and the 25 lakh is the contribution. If the turnover and the contribution below the threshold defined in the LLP Act and the rules, so the audit would not be applicable. Otherwise, the audit is compulsory. And but there is a choice. If partners required to conduct the audit as per the LLP agreement, so they can do the voluntary audit. So next question, do we need to comply with AS and SAS both? Because again, the accounting standards and the standards on auditing both are notified for the companies in the Companies Act. But if you see the LLP Act, these are not notified by the central government yet. So do we need to comply? So if you see the structure, so for the non-corporate entities, the standards are applicable, which are the accounting standard are applicable, which are issued by the ICAI. And the standards on auditing, which are applicable for the companies by way of notification in the Companies Act. But for the companies, for the entities other than companies, the standards on auditing issued by the ICAI needs to be complied with. So there is no relaxation as such for the compliance of accounting standards and standards on auditing. Only thing is, the accounting standards for the non-corporate entities are applicable by way of their level. So there are 4 levels defined: level 1, level 2, 3, and 4. So level 1 are the listed entities, and other are the entities which are categorized under the MSME. So that relaxation is even defined in the guidance note of the financial statement as well. So next is Ind AS framework applicable on LLPs? Because everywhere, when we have the global tendering process, we are having the customer or the vendor based out of India, overseas vendors. So do we need to comply with the Ind AS framework on LLP? Are the Ind AS applicable on the LLPs? So the answer is no. not yet notified by the central government, but later on maybe the days may be applicable, but as of now it's not applicable. Is there is a specific format of reporting? Why I'm saying, because these are the basic questions, right? So I'm setting the foundation, then we'll discuss the considerations in subsequent slides in detail. So a specific format of reporting for the corporates is defined, like Schedule 3 is there. Guidance note for Schedule 3 is also there. But there is no specific format given in the LLP Act or the rules there. But the thing is, recently, guidance note on the presentation of financial statements issued by the ICI and the management of the LLP and the, of course, the auditor needs to see the compliance in lines with the guidance note issued by the ICI. Who is responsible to make financials for LLPs? Of course, in audit, the maker checker concept needs to be followed. So the management of the LLP needs to prepare the financial statements of LLPs, and auditors need to check and give the opinion thereon. Independence requirement. See, when we say the audit of LLPs, so this is called a statutory audit. This is not the tax audit, right? And when we say this stat audit, and now the question comes whether the independence requirement is need to be complied with, like for companies in the Companies Act, though it's not defined in the LLP Act, but Code of Ethics of ICA needs to be complied with, which talks about the compliance of independence, right? And of course, the standards on auditing requires auditors to be independent. So independence requirement is must. Communication with the previous auditor is very, very important. If the auditor is appointed, the incoming auditor needs to be needs to communicate with the previous auditor. Previous auditor can be, leave his position by way of removal or the resignation. In both the scenarios, incoming auditor needs to communicate with the previous auditor, right? So this is compulsory as per the Code of Ethics of ICI. If they are not following, if the LLP auditor is not following, this is complete, clear cut, non-compliance of Code of Ethics. Is changes to LLP agreement require reporting like in the Partnership Act, right? So it's not compulsory that you need to register the partnership deed. It's optional. But here, first of all, the auditor needs to ensure that, of course, before this LLP agreement intimation with the ROC, they may not allow them to register. So the LLP agreement needs to be registered with the ROC, and the changes in the LLP agreement, it's requires to be reported with the registrar, because like in companies MOA and AOA, the LLP agreement is the bylaws for the LLP or the limited liability partnership firm. So this is very critical document for this organization, for the LLPs. And any changes in this LLP agreement, like the addition of the partner or the removal of the partner, or then the change in the shareholding pattern, anything needs to be, whatever change is there needs to be informed to the registrar. Now the RAP, risk assessment procedures, planning stage is required. See, the beauty of the standards on auditing is like these standards are relevant for all these stages. So there are standards on auditing which are applicable on planning, and there are standards which are applicable for execution stage, and there are standards which are applicable on completion or the reporting stage, like the 700 series. So 100 till 700 series needs to be complied with when we do the audit of LLPs. Regarding the planning stage, so the risk assessment, like we do in the other entities, like the companies, the risk assessment procedures for LLPs is also required. It's not something like we can take the plea that this is the LLP and let's just avoid the risk assessment, just do the analytical. No, the risk assessment procedures is required based on the based on the strategy we have developed. Misstatement. When we do the audit procedures and found the misstatement, we need to ensure and check whether the error or the misstatement we have found is due to error or it's intentional or it's giving the flavor of fraud in the LLP. That we need to see and conclude. And the next is the professional skepticism. So this is nothing just the questioning mind, but this is very, very important, friends. If we are not following the professional skepticism during the course of audit, there are high chances that we may not ask the relevant questions which are applicable on the particular audit or the particular caption where we have, where we are planning to perform the audit procedures. And the next is the critical observations in reviews. As you can see, there are regulators who are giving the opinion on the past audit reports issued by the, not the opinion, the observations issued by the past auditors, the NEFRA and the review by the QRBs, the peer reviews. So the observations, if I summarize in a 2 to 3 lines, so the basic gaps they found in the documentation, like we do the audit, we go to the field and we do the detailed audit procedures, right? But we are not able to explain what we did at the time of audit. So if friends, if nothing, I mean, whatever we have done, if not documented, means not done. And well documented means you have, I mean, things to place in front of reviewer that yes, this is the requirement of standards on auditing, this is the requirement of accounting standards, and we have done the compliance of these standards and the accounting standards and standards on auditing, and this is how we have concluded, like we have planned these procedures and we have performed these procedures and we have concluded like this. So whatever audit procedures we are doing, your work paper should explain, that work paper should be self-speaking and give the clear conclusion in the work paper itself, that how you did the audit procedures and how you concluded. Next is the team knowledge and experience. So we, we planned the team and depute them and ask them to do the field work. But here the team capabilities, team knowledge is very, very important. For example, if the entities where you are doing the audit is in banking or in IT or in, I would say, the oil and gas, right? And your team is not having the experience of that industry, so that the composition of that team may not be that much suitable for that particular client if you are not, adequately planning the team considering their experience and their knowledge. And last but not the least, since we are discussing on the fundamentals, the documentation part, like thinking and inking. So it's not like documenting only. We have to first understand what is required as per the standards on auditing, what we have to do, and what we have done, and align whether the requirement of standards on auditing is met with the audit procedures we have performed. If not, then we have to perform the audit procedure in lines with the standards on auditing only. And the procedures, what we have done, then we have to document. So the documentation is very, very important. It's not like we have issued the audit opinion and thereafter we are thinking like what kind of audit procedures we have to do. No, it's not allowed as per standards on auditing. It should be parallel. Okay. Introduction. Since we have to understand the key audit considerations. So before that, we have to understand what is the basic requirement of LLPs. What is LLP? LLP is the abbreviation of limited liability partnership. And this abbreviation LLP word is allowed as per law, as per LLP Act, right? It's not like choice of the management to write LLP only. It's allowed as per law. As you can see, I mean, no one written the name ABC Limited Liability Partnership. So everyone is like, even you receive the certificate from the registrar, like the ABC LLP or ABC India LLP. So LLP is a body corporate. It's a, I would say, the mid category between partnership firm and the companies. So the LLP is a body corporate formed under the LLP Act, and it's a separate legal entity from its partner, unlike partnership firm where there is no separate legal entity in the partnership firm. There are few features of LLP. Let's understand. Like we understood in the previous slide, it's a body corporate. It's a separate legal existence, right? Partnership firm is not so, legally existence recognized. Perpetual succession, like in succession, in case of Companies Act. So there is a perpetual succession concept. But in case of partnership firm, if any partner remove, so there might be a situation like the partnership needs to be dissolved. But in case of LLP, partners can be entered or removed. I mean, the partnership at the LLP will remain in the existence. There's a concept of designated partner. Like in companies, there are directors who are whole time involved in the operations of the company. Similarly, in the LLP, there are designated partners who are involved in the financials and the operating decisions of the company, LLP. Liabilities of the partners are limited. They have the common seal like we do have in the companies. There are partner by the agreement. If there is no agreement, there is no partnership. So the LLP agreement is the foundation of the LLP, and the auditor needs to ensure the compliance of the LLP agreement. There are few forms which needs to be filed. One is which is critical is the annual accounts. All LLP needs to file a Form 8 with the registrar on or before 30th October. So basically, this statement of solvency needs to be given in the Form 8. And irrespective whether audit of LLP is applicable or not, this Form 8 needs to be filed. In case audit is applicable, that needs to be in case audit is not applicable, in that case, that needs to be signed by the designated partner and submit with the registrar. And annual return needs to be filed within 60 days from the end of the financial year. And when the income tax return, I mean, where tax audits are applicable, then the due date for tax audit comes to 30th September, otherwise 31st July. So these are a few differences like the registration. So registration with the registrar of LLP is required. Partnership firm registration is optional. And for the company, registration with registrar of ROC is ROC required. It's again a distinct entity, but partnership firm is not a separate legal entity. Number of members, minimum 2 and maximum no limit. But for the partnership firm, there is a limit, maximum 20. And the limited, so the liability of partners or the members, the liability limited to the extent their contribution towards LLP. So if they have the contribution, for example, 10 lakhs, so they have the liability till 10 lakh rupees only. In the partnership firm, liability is unlimited. Even partners are severally and jointly liable. So in case of companies, generally liability to the amount required to paid up on each share, like a liability only. Okay. Let's understand the applicability of audit and auditor's appointment in LLP. Mandatory audit. If you read the language, so as per section 34 of the LLP Act, LLP is required to maintain the books of accounts in double entry system and requires to get their account audited. The threshold is if turnover exceeds 40 lakh rupees or the contribution exceed 25 lakh in any financial year, then audit is compulsory. If LLP's obligation to file the statement of account and solvency arise irrespective of turnover, as we discussed in the previous slide. Exemption is like if below 40 lakh or the contribution below 25 lakh, in that scenario, we need to consider both the limits together. Like LLP with a turnover less than or equal to 40 lakh rupees and contribution less than or equal to 25 lakhs. Then only they are exempt from mandatory audit. In case, for example, if the turnover is 39 lakh rupees or 20 lakh rupees and the contribution is 28 lakh rupees, still the audit will be applicable. Voluntary audit can be done. And the appointment of auditors, the LLPs are required to appoint the auditor within 30 days of incorporation. And appointed auditor must consent to the appointment in writing like we do in the Companies Act, right? The consent and the eligibility letter needs to be given. So the auditor may be appointed. Just a second. So the auditor may be appointed by the designated partner of the LLP at any time, but before the end of the financial year, first financial year. And in the subsequent year, 30 days prior to the end of the financial year, or to fill the casual vacancy of the auditor, or to fill the casual vacancy caused by the removal of auditor. Because auditor can be removed or auditor can voluntarily resign also. The partners may appoint the auditor if the designated partners have failed to appoint them. The removal to be governed by LLP agreement. If no clause, then with consent of all the partners. So here we understood the basic structure of the LLP, the fundamentals. Now we'll understand, which accounting standards and standards on auditing will be applicable. Then we'll understand the key audit considerations. LLP Amendment Act 2021. So we are discussing about the applicability of accounting standards. So LLP Amendment Act 2021 recently was there, has prescribed that the central government may, in consultation with NEFRA, constituted under the Act 132 of the Companies Act 2013, prescribe the standards of accounting as recommended by ICI for class or classes of limited liability partnerships. Right? So recent amendment was there where they prescribed that class-wise the standards on accounting standard will be applicable as recommended by the ICI. The accounting standard for LLP are yet to be notified by the central government. But if not yet notified, what to do? Like we are doing for the other non-corporate entities, LLP currently follow accounting standards prescribed by ICI for financial statement preparation. So we need to check whether the assertion taken by the management and the compliance of accounting standard issued by the ICI are done by the management or not. The classification of non-corporate entities for the applicability of ICI accounting standards are categorized in 4 levels, level 1, 2, 3, 4. So the classification into levels allows for tailored compliance based on the size of non-corporate entities. Why level? Because the level 1 basically the listed or the large entities, the high volume entities, I would say, right? And level 2, 3, 4 are the entities which are categorized under the size of MSMEs. As I mentioned recently, the guidance note on financial statements of LLP issued by the ASB of ICI, and auditor of LLP needs to consider the guidance note as well while reviewing the financial statements presentation. The applicability of AS level 1, large size entities required to comply with all accounting standards. So there is no relaxation. But in case of level 2, level 3, and level 4, There are threshold limit which is given in the guidance note as well. The MSME is required to comply with exemptions oblique relaxations granted by ICI. For example, cash flows, or the segment reporting, or the accounting for investments. So there are standards which may not be applicable considering the level of the organization. This is regarding the standards on auditing. We discussed in the applicability, in the previous slide, this applicability of accounting standards. Now you'll understand the standards on auditing for LLP. Like friends, like in Companies Act, ICI recommended to NFRA regarding 35 standards on auditing, right? For the notification under section 143(10) of the Companies Act for audit of companies. Similarly, for the LLPs, ICI is of the view that the aforesaid standards on auditing applicable to audit of companies recommended by ICI to NFRA should apply mutandis to audit of LLPs. So it's clear that the standards on auditing which are applicable, which recommended to the companies are applicable on the LLPs also. And otherwise, the non-corporate entries are also following the standards on auditing which are applicable issued by the ICI. Correct? Though it's officially not yet notified by the central government. So till now, till the time they notify, we have to follow the standards on auditing prescribed by ICI to perform the audit procedures. It's not something like if not prescribed in the LLP Act or the rules, we should not comply. We have to comply. And just so you know, the AASB of ICI has issued the exposure draft of standards on auditing for LLPs for the public comments last month. And the last date to submit the comment is 6th Jan 2024. Okay, so we understood the basics. Let's understand. Let's go a little deep and understand the requirement of audit in LLP regarding the key aspects, right, which are very, very much important. First consideration is independence and ethical consideration. So the question is whether independence and ethical consideration is required in case of LLP. The answer is yes. And we have to confirm the compliance with independence requirements, document threats to independence and safeguards implemented. Threats like the familiarity threats, which is defined in the Code of Ethics of ICI. So there are threats defined in the Code of Ethics of ICI. We need to see, read, document, and comply with. Avoid conflict of interest and maintain impartiality. Exercise professional skepticism, the questioning mind, which is very, very important, which we discussed in the last slide also, previous slide also, that professional skepticism is very important while conducting the audit procedures in lines with the standards on auditing. Adhere to the ethical principles and professional standards. Assess the appropriateness of safeguards implemented. So we have to see whether the safeguards we have implemented are appropriate or not. Second, the communication with the previous auditor. Communication with the previous auditor by the incoming auditor is mandatory. There is no option to it, right? And the way of communicating can be like you can send a letter to register acknowledgement due, or by hand and take the written acknowledgement, or by way of communicating over email with the retiring auditors, email address registered with the ICI or the last known official email address. But in short, for example, I'll give you the scenario, because in LLP there is no requirement to intimate to the ROC that the auditor is so and so firm. In that case, there might be a situation like the engagement letter is signed with ABC and Associates, right? And later on, the designated partner appointed another firm, for example, XYZ and Associates, right? And XYZ auditor issued issued the opinion and concluded the audit, but they did not had a discussion with the management whether you appointed another. I mean, the income auditor did not had the discussion with the partners whether you appointed the auditor or not. So if they say yes, we appointed, but we don't want them to do the audit. In that case, ideally the LLP partners needs to ensure the resignation by the previous auditor, where they have already had the arrangements, the written engagement letter, and the incoming auditor still needs to communicate with that auditor that I am going to do the audit, and uh, do you have any objection and in this regard, professional or otherwise, right? So these kind of situation can happen here, and just make sure that you have the client acceptance and engagement policies, the firm, and ensure that this kind of situation should not be there, right? Agreeing the terms of audit engagement, criteria to decide whether to accept or continue audit engagement. So establish whether preconditions for audit are present, confirming that there is a common understanding between the auditor and management, and where appropriate, though charged with governance of the terms of the audit engagement. Determine whether preconditions for audit are present, whether financial reporting framework applied in the presentation of financial statements are acceptable. You need to see the presentation of the financial statements by the LLPs are acceptable or not, and obtain agreement of management that it acknowledge and understand its responsibility. It's not something like all the responsibilities lies on the shoulders of auditor, right? I mean, it's not a tough job if we follow the standards on auditing requirement as it is, right? Fourth consideration, which is very, very critical, is the understanding the entity. So what generally happen, friends, we go, many times while doing the peer reviews or the other reviews, I observe that the team is stationed at the audit place, and sometimes they are not having the uh, overall the holistic view of the client. They are in the mid of or on the verge of completion of the audit engagement, but over the period they gain the knowledge. Ideally that knowledge should gain at the time of planning only, right? So understanding the entity is very critical. The auditor shall obtain an understanding of the following: relevant industry like the banking, insurance, or the other technical like the oil and gas, IT. These days, uh, the tech companies, the startups. So the relevant industry knowledge is very much important. The regulator, for example, for the aviation airport authority of in India, and for the insurance, IRDA, for the banking, RBI. So the regulator, we should know who is the regulator, and the other factors, including the applicable financial reporting framework, the nature of the entity, including the operations, and the ownership and the governance structure, who is the beneficial owner of this entity. I mean, there are scenarios like LLP is there in India, and the parent of the companies are based out of India, I mean, the overseas. So that entity is basically the subsidiary or the another entity of the group based out of Japan or the UK. So we need to understand who is controlling that particular entity. And the second aspect regarding the understanding of the entity is the objective and strategy and the selection and the application of accounting policies. Who is basically selecting the accounting policies and applying the accounting policies, and the reason for change. Are they documenting the changes? Are they aligning their policies with the parent company, or they have the compulsion from the regulator to frame the policy accordingly, right? So that these are the basic foundation that we need to understand before commencement of audit itself. consideration of laws and regulations in an audit of financial statements, very, very important. The auditors, for example, uh, we go for the audit, and we are not aware of, I mean, what kind of laws and regulations are applicable on particular entity. So there are chances that we may skip the critical requirements by the regulator or the laws applicable on that particular entity. So first we need to understand the legal and regulatory framework applicable on LLP, and identify and assess the risk. For that matter, you can refer the SA 315 and SA 330. And we need to apply the procedure in a way to detect the non-compliance and communicate the identified and or the suspected non-compliance with the management. For example, in your case, the designated partners of the LLP, that you need to communicate with them. Developing audit strategy and audit plan. So many of times when I did the review of LLPs, I found that the team who were involved, so the strategy was haphazard, or that was not properly aligned with the requirement of standards on auditing. So in this case, I always suggest, for example, to identify the engagement characteristics. I mean, we have to understand what we are doing and what the objective of the activities we are going to do. Plan audit timing and communication based on reporting objectives. So we have to align the man hours based on the objectives we are trying to achieve, and use the professional judgment to identify the crucial factors. And if required, you may involve the expert also, because there are change in the industry. So if you are not competent enough, then you need to comply, you need to involve the expert, right? And consider the result of preliminary engagement, and ascertain the nature, timing, and extent of resources, right? And the regarding the plan, always consider the nature, timing, and extent of planned risk assessment procedures, planned based on the materiality you have decided, right? And the nature and timing, extent of planned further procedures. You will do the other procedures and the other planned procedures that are required. Internal control evaluation. So the internal control evaluation here do not means that we have to give the separate report like we do in the Companies Act regarding the internal control over financial reporting, IFCFR. But here, since if we are doing the audit of the large entities or the mid-size entities, of course, we have to rely with the controls, right? We can't do 100% checking. For that matter, we have to evaluate the internal control place in the LLP. So we need to evaluate the design and implementation of internal control over financial reporting. Here, it do not means that we are going to report on the IFCFR separately, but we need to evaluate the controls regarding the financial reporting, and identify the key controls, right? Key controls relevant to financial statement assertions. I mean, what kind of controls they have in the LLP regarding the key assertions they have used while preparing the financial statements, and confirm whether the assertions they have are consistently applied for control activities, and document the gaps you have identified while performing the internal controls. Like, you can ask management to provide the process notes or the SOPs. You can identify, you can do the walkthrough of those SOPs. You can take the samples based on your sampling methodology. You can do the basically, you can develop the testing template for those samples and do the testing. Based on the testing results, you may observe some gaps. That gaps you need to document, and you can suggest management to resolve those gaps and ensure whether they conform or adhere to the legal provisions related to internal control evaluation. If not, then you need to ask management to confirm over the gaps. Assess impact of changes in business processes or internal control effectiveness. So if in case there are changes in the business processes, which are key business processes, then you need to evaluate what are the impact on the internal control effectiveness. For example, if they are in the two-wheeler and now they are moving to four-wheeler category of the automobile sector, then do they have the internal control regarding the four-wheeler activities? So that kind of things we need to check whether they have the impact on the internal controls. Risk assessment procedures, like we discussed in the second slide, that the risk assessment procedures is required in the LLP also. So we have to understand and obtain the understanding of entity and its environment, right? And understand and evaluate the internal control, inquire with the management and other personnel, inquire with legal counsel where there are litigations or the pending cases on the LLPs, then you need to discuss with the uh, with their counsel or the tax expert or the labor law expert directly what is the situation of the uh, pending litigations and what are the possibility regarding their outcome. I mean, whether the possibility to pay is remote or the higher or the medium, that you need to understand directly with the legal counsel. Perform analytical procedures like we do in the companies, and observation of entity operations you need to evaluate, and inspection of entities premise and plant facilities is very very important. For example, your client is based out of Gurgaon and their factory is based out of Karnataka, Bangalore, but in Gurgaon, they are completely managing their admin activities. They have their corporate office or the registered office in Gurgaon, and they have the plant in Bangalore. I think, you should, your audit team should visit at least bare minimum the partner of or the technical reviewer needs to visit their premises and plant facilities and inspect, how they are doing the manufacturing activities there. Information relating to prior periods that needs to be ensured, and see the presentation and how they are doing that. And what was the reason behind the prior periods, whether there was a misstatement, deficiency in controls, etc. And last but not the least, regarding the risk assessment procedures, discussion among the engagement team. So whatever we are planning regarding the identification of risk, response to the risk, control activities, substantive analytic process, so everything needs to be discussed among the engagement team. There should not be any communication gap. And this is the requirement of standards around it. Legal and regulatory compliance, again, very, very important. Confirm LLP's registration status and details with the MCA. Verify LLP compliance with the LLP Act. Okay, why I was saying confirm LLP's registration status and details with the MCA, because this single website is under the, for the LLPs and companies, the ROC, Registrar of Companies, I would say Ministry of Corporate Affairs is managing for both these type of entities. And verify LLP agreement complies with the LLP Act 2008 or not, because there are basic structure given in the LLP Act itself, like what kind of things needs to be there in the LLP agreement, and check whether the LLP agreement is proper or not. Validate the filings of annual returns and statements of solvency filed by the LLP with the registrar. Why we are saying the validation? There are chances that the information they are submitting to the, there might be a situation that the information what they are giving to the ROC different what the auditor is giving to them. So kindly align the information which are given in the annual returns and the statement of solvency. Ensure the correct and accurate information in DPN update for partners. So these are the law and regulatory, legal and regulatory compliance which needs to review. Review compliance to statutory filing deadlines. Whether in which direction the LLP is doing? Are they completely non-compliant? Are they serious about the compliance of the statutory laws? That we need to see, and that's very, very critical. Otherwise, everywhere you will find the gaps. Like only they might be perfect in the operations, but they are not perfect in the regulatory compliance of the country. So that you need to ensure. Confirm any change in the LLP's name or address. I mean, what was the reason of the change in the name, and are they completely disclosing the change in the name? For example, ABC Limited becomes XYZ. So you can you have to see, like, are they writing like ABC Associates LLP, and formerly known as ABC and Company. I mean, LLP, like this. So validate compliance with the statutory documentation requirements. Verify adherence to legal provisions related to LLP operations. For example, in case they are in pharma or they are in biotech, so you need to see whether are they complying with the legal provisions applicable on that particular industry. Assess the impact of legislative changes on the LLP operations. For example, they are in a business which is restricted by the Indian government by way of issuing a new law, or is there any there might be an impact on that particular legislative changes in the operations, that we need to see, because there might be a situation that that laws go against the company, and their going concern assumptions may impact, right? Confirm accuracy in disclosure of LLP principal place of business. Are they are disclosing the principal place correctly or not? Validate compliance with audit rotation requirement as per agreement, if any. See, like we do in companies, like there is no in the LLP, there is no requirement of audit rotation as such, but LLP agreement can have the criteria to rotate out the auditor of, say, 5 years or the 10 years. But in the Companies Act, it's compulsory, but in LLP Act, it's not mandatory. But in that case, if partners wants to rotate out the auditor due to good corporate governance, they may have this policy or the clause in the agreement. Confirm proper maintenance of statutory register, like register of partners, etc. So we have to see what is there in the statutory register. Are they updated? Are they having the correct information or not? Are they placed at the principal place of business only, or they are placed at the different place, right? Materiality, opening balances, use of estimates is another criteria. Materiality, use of benchmarks. So now we are at the planning, and we need to understand, I mean, what are the materiality benchmarks we have to use. For example, if you are the LLP in the banking or the it's a non-banking financial corporation, NBFC business, non-banking business. In that scenario, you might consider the advances for the materiality benchmark, or the liabilities, or if entity in the manufacturing, you may consider the revenue or the expenses, or if the new entities are having the base of PPE, the major amount, then you can consider the PP also. So basically, you have to analyze the benchmark which is more relevant to the LLP, the respective entity, and the item on which the attention of users tends to be focused, the nature of entity, ownership structure, and the way it is financed. The materiality level, of course, based on the accounts or the disclosure for which the misstatement could reasonably influence the economic decision of the users. So you have to decide which is, I mean, you have whether revenue is the benchmark or the PP is the benchmark to compute the materiality. It's upon the professional judgment of the auditor. But yes, materiality computation is very critical. It should be honored in line with the standards of audit. Initial audit engagement, opening balance. So read the most recent financial statements, if any. Determine whether prior periods closing balance have been correctly brought forward to the current periods or when appropriate. Determine whether opening balance reflect the application of appropriate accounting policies. Perform specific audit procedures to obtain evidence regarding the opening balance. So see, SA510 application regarding initial opening balance is compulsory, right? And if the audit entity is having the previous year audited numbers, and this the second year of operations of the LLP. In case it's a first year, then it's not applicable. But of course, in case you are subsequent auditor, then you need to comply with initial audit engagements. Use of estimates, like we do in other corporate entities, review and test the process used by the management to develop the estimate. So review and reperformance of the process used by the management to develop the estimate is necessary. And if required, compute your independent estimate for comparison, and review subsequent event for events which confirm the estimate made. For example, you have considered the figures which are about to come, and you are in the second year, or you are in the fifth or sixth year of audit, and the entity is following the past history. So you can align whether the figures they have considered in the history is correct or not, and the subsequent figures, if you are in the subsequent period before signing of the audit report, you can align that figures whether the actual and the estimated is correct or not. Ownership and membership changes, basically this talks about the addition or the deletion of partners in the LLP, because partners can be changed in the LLP. This is the feature of LLP. So verify accuracy of register of partners, whether register is complete or not, or they have the addition and deletion of the partners detail in the register or not. Confirm compliance with LLP agreement for partner changes. So LLP agreement should consider the requirement, I mean, how to do the changes in the partnership. Assess impact of changes on capital structure. For example, if they change the audit partner, and partner who is incoming partner needs to bring the capital, and similarly the partner who is outgoing may withdraw the capital. Validate documentation for admission or withdrawals of partner. I mean, the document signed by the incoming partner or the exiting partner needs to be evaluated in lines with the LLP agreement and the LLP Act, if not the criteria there. Confirm proper disclosure and declarations for new partners. Verify accuracy of partner details in statutory filings. Align the basically you can check the register of partners with the returns or the other information regarding the addition deletion of the partners filed with the registrar of companies, because registrar of companies as of now is managing for the LLPs also. Confirm compliance with LLP agreement for partner exit. So the addition and deletion both are governed by the LLP agreement. Next is the capital contribution and distributions. So we understood in the previous slide regarding the admission and deletion of removal of the partner. Now we'll understand the capital contribution, because this is very, very critical in the audit of LLP, like how their capital contributions are managed. Verify accuracy of capital contributions recorded in financial statements. Confirm compliance with LLP agreement for profit sharing and loss distribution. Very critical. Assess compliance with the LLP agreement on capital calls and contributions. verify documentation supporting capital transactions, review appropriateness of profit sharing mechanism. So how they are distributing the profit or the appropriating the profit is important. Confirm proper recording of capital contribution statutory filings. Are they disclosing the complete figures in the statutory filings regarding the capital contributions? It's critical. Assess impact of capital changes on financial position. So if partners are incoming or outgoing, so whether the correct financial impact is giving in the financial statements or not. Confirm adherence to LLP agreement provisions for capital withdrawal. I mean, why and in which scenarios they can withdraw the capital, you need to understand. The auditor needs to understand. Validate a disclosure of capital structure changes in financial statements. Verify accuracy of profit sharing ratios. Accuracy of financial profit sharing ratios, friends, are very critical. There might be a scenario like in the agreement which is filed with the ROC, the percentage is different. In the agreement shown to you might be old and the percentages are different. And the figures, I mean, the Excel they are using for computation of their profit might be old, or they might not be updated by their account streams. In that scenario, you need to check with the final agreement, updated agreement of the LLP, and align the accuracy with the working provided to you. Confirm compliance with legal provisions related to capital changes. Validate the calculation of partners' capital account. This is again very important. Assess the impact of capital changes on LLP's borrowing capacity. Because in LLP agreement, there might be some conditions to borrow the money, and if the conditions are do not meet or the borrowings are exceeding the limit, there might be a non-compliance of an LLP agreement. Confirm adherence to statutory provisions relating to capital contributions if applicable. So these were the past was the 12 considerations which we discussed. There are few more also we will discuss, and then we'll consider the practical case studies. Specific considerations for selected item while obtaining audit evidence. So these are similar to the considerations similar to the companies where we do the inventory count, litigation, and the segment related audit procedures. So regarding the inventory count, the specific consideration apart from the valuation and NRV testing of the inventories, we have to obtain the sufficient appropriate audit evidence. I'm saying sufficient appropriate audit evidence means the evidence which you are collecting should be appropriate and sufficient. Regarding the existence and condition, like the inventory should be there and the inventory should be in good condition. By attending at physical inventory count. So here the objective of this special consideration is while inventory count exercised by the management, your team should be there. You should basically observe the inventory count in your presence. And if not possible, perform the alternate audit procedures to obtain the sufficient audit evidence if physical inventory count is impracticable. Litigation and claims. Design and perform audit procedures in order to identify litigation claims involving the entity which may give rise to risk of material mistake. And seeking direct communication, like we discussed in the previous slide, you have to obtain, I think, direct communication with the entity's external legal counsel and get the comfort and have the inquiry with the counsel that what is the potential, the probability to go against and in the favor of the company regarding the particular legal or the litigation claims. Segment information, though it's applicable on the large entities, so you have to obtain the sufficient appropriate evidence regarding the presentational disclosure of segment information. You have to conclude, I mean, why this particular business or the information needs to be reported in this segment information, and why the other information should not be reported, because there might be chances that the relevant information is not reported in this segment reporting. And understand the method used by the management in determining the segment information in lines with the accounting standards and the standards on auditing, and perform analytical procedures or the other procedures as appropriate, and check the quality also. Hygiene check is also required, because there might be error in the financial statement presentation by the management regarding the segment information. Next is the external confirmation, subsequent events, written representation. So external process is a confirmation process. So these are the considerations which required by the management in the company's audit also, and by the auditor in the company's audit also, and similarly for the LLP's audit also. So regarding external confirmation process, determine information to be confirmed or requested, select the appropriate confirming party, designing the confirmation request, including addressing content and format, sending the request, including follow-up request when necessary to the confirming party, RECO, the information obtained from the external party with the entity's books. Friends, there is a dedicated standards on auditing regarding the external confirmation process. I'll recommend every time to the audit team to read the standards on auditing again and again and apply while doing the audit procedures. Because whenever we read the standards on auditing, that will give us the more confidence and more clarity about these expectations required by the standards on auditing. Subsequent event, obtain understanding of management procedures for identification of subsequent events, read minutes, read entity's latest subsequent interim financial statements, though it may not be applicable, but if they are reporting quarterly to the parent company, or they are having for their MIS purpose, that information you can ask from the management and inquire management for any subsequent event that might affect the financial events for affect the financial statements. For example, if you did the audit in the month of May, and in the April, and there are incident like the fire broke down in the factory of the LLP. So in that scenario, there might be a requirement to disclose that fact in your financial statements, and you need to highlight in the audit report also, considering the pervasive impact on the financial statements, right? So that you need to understand the impact of subsequent event. That may be adjusting event also, that may not be adjusting event. So that you need to see. For example, you have the large number of trade receivables outstanding on the 31st March. But at the time of before concluding audit report in the month of, for example, June, you got to know that the 50% or the 25% a single party who was significant, who having significant amount in the trade receivables, for example, 25% got insolvent, or got declared himself in the insolvency, filed the insolvency with the IBC. So if you got such kind of information before conclusion, then you need to see whether you need to adjust the financial statements on 31st March or not. You need to provide for the provision for doubtful debts on 31st March, or I mean, you need to understand with the those charged with governance regarding the impact of subsequent event on 31st March. So the event would be adjusting or non-adjusting, that you need to understand in lines with the standards on auditing and the accounting standard. Returns representation, obtain written representation regarding the responsibility of the management. First of all, friends, I would like to convey one point very clearly, that MRL, the management representation letter, cannot replace the audit procedures required to be performed by the auditor in lines with the standards of auditing. Correct? MRL is to get the understanding from the management and place in the audit file to avoid any communication gap. It cannot replace our audit procedures. We have to perform our audit procedures. So obtain written management representation letter regarding preparation of financial statement, provided the auditor with all relevant information. All transactions have been recorded and reflected in financial statement, other representation. Requested return representation not provided. Discuss the matter with the management why you are not providing. For example, they are not providing the MRL for the preparation of financial statement. So you can discuss like the financial statement prepared by them, why they are not giving the MRL, and evaluate the integrity of the management, whether management is giving the correct information to you or not. So the MRL basically set the responsibility of the management. Take appropriate actions, including determining the possible effect on the opinion in the auditors. So next is the related party transactions. Identify and document related party transactions. So there are chances that the LLP is having the business with the other group entities. In that scenario, you need to identify and document related party transactions, confirm compliance with the disclosure requirements for related party transactions, like in your case, standards, accounting standard, the ACD. Assess fairness of terms in related party transactions, arm's length pricing you need to check. Verify existence of an approval process for such transactions. So approval mechanism is also required. Evaluate impact of related party transactions on financial statements, the level and the amount and the quantum of the transactions with the related party, and assess compliance with the statutory disclosure requirements for related party transactions, if any. Assess the impact of related party transactions on financial performance. Confirm proper accounting for related party transactions. So starting from identification, their fairness of terms, their disclosures, and their proper valuation or the accounting for their transaction is very, very important. Assess the appropriateness of related party disclosures required with the standards on auditing and accounting standards. Confirm adherence to the legal provisions related to the related party transactions. So if you ask me to summarize, so basically the identification and the documentation is very, very much critical. Starting from them, you can just see the transactions in the books of accounts with the parties you have identified and the disclosures thereof with the financial statements. That's it. But many times we fail. We just jump into the identification of transactions, not the related parties. So sometimes we failed. We just see that these are the parties which were reported last year. We need to see the transaction with them and report to them. So, but there are chances that there are new parties which are related parties to the LLP and they are into the business this year. But since we are not following the procedures to identify the parties also. So if we are not identifying the new parties also, there might be a chances that we may not report, or we miss to report the new parties. Going concern assessment is again very important. Assess the appropriateness of management going concern assessment. Confirm accuracy of cash flow projections and financial indicators. Identify material uncertainties affecting the abilities to continue as a going concern. Assess impact of economic, industry, and economic conditions and industry factors. For example, if they are in tech companies or if they are in automobile, so the change in the legislative or the laws and regulations may impact the business of the entity. For example, recently the automobile companies who were in BS4, and the government comes with the proposal of BS6 and then EV. So there are chances that the business of the entities may impact. The level of impact you need to assess and check whether the going concern is hit or not. Validate disclosure of management plans to address material uncertainties. So the disclosure of plans is required. So you have to understand, I mean, how management is planning to manage the change. Validate disclosure of events or conditions that may cause significant doubt on LLP's ability to continue as a going concern. So, for example, in the previous example, like if fire incident happened, right, subsequent to the audit, subsequent to the end of the financial year. So, I mean, how the management is managing, so that you need to assess, right? Confirm compliance with legal provisions related to going concern disclosures. Assess the appropriateness of cash flow projections and assumptions. So management will provide the financial projections to you. You need to check whether the projections developed by the management is correct or not, right? For example, if you are in the business and someone asks you to provide, so you need to provide the basis of your assumptions you have developed for, to get the company run as a going concern for next few years. But of course, for the going concern assumption by the auditor, you need to evaluate for a year. Confirm adherence to the disclosure requirements for event occurring after the reporting period. So subsequent event disclosure is also required, and check the impact on the going concern. Assess the impact of change in industry conditions on going concern assessments, which is very, very critical as we discussed in the previous example. Like if changes in the BS4 to BS6 or the EV, this might impact directly the business of the company. Or in the COVID times, there are situations for the hospitality industries. There was complete lockdown. So their industry was down for that particular period. But later on, they revived, right? Considering the demand and supply. But on that particular period, there was situation of going concern. Confirm proper disclosure of financial support arrangements. For example, your company or for example, your entity, the LLP, in the in the losses or the having the accumulated losses, huge accumulated losses, though they are having the good business, their business is increasing, but still they are in losses considering their huge expenditure in the sales and the marketing or the travel. So and the LLP is new to the system. So since they are growing slowly, but their expense are higher than their income, so in that case they are having the accumulated losses. To support, their parent company give you the financial and the operational support letter, or to the management of the LLP, that in case of any financial crisis, we will help you in case of any financial or the operational crisis. So that disclosure you need to see whether that's directly from the parent company or of the LLP or not. Financial reporting consideration is like you need to scrutinize the financial statements completeness, accuracy, and compliance in all respect, and consistency. Check the consistency in accounting policies. There might be a change in the accounting policy that you need to manage with the in lines with the standards on auditing and the accounting standard. Check the disclosure of significant accounting policies and the accuracy and appropriateness of accounting estimates, like the warranty claims and the contingent liabilities and and the the gratuity provisions that you need to see. Compliance with the accounting standards. Validate the appropriateness of presentation of financial statements. Now you can refer the guidance note, and later on the central government may notify the presentation framework also. Assess the impact of change in accounting policies. So if any change is done in the accounting policies, then you need to assess the impact. Communication with the partners. So like we do in the companies with the those charged with the governance, here you need to communicate with the partners for the open and transparent communication, being an auditor, and update the on the audit process with the management of the LLP, address queries or concerns promptly, seek clarification on matters impacting the audit memos, the audit issues observed by the audit team, inform partners of material weakness in internal controls, like we discussed in the previous slide regarding the internal control evaluation. So the identified deficiencies or gaps you need to discuss with the partners, and confirm the adherence to the legal provisions related to communication with the partners, if any, like if any mode of communication is defined in the LP agreement. Assess the impact of change in audit timelines on communication processes. For example, you had the timeline given by the partners to complete by 30th of June, and later on there is a change in the audit timeline to 15th of July. So that needs to be well communicated with the partners to avoid any communication gap. Validate documentation of partner communications, like we document everything regarding the company's audit. Similarly, for the LLP audit, you need to document the communication with the partners happened during the course of audit of LLP. Tax compliance, again, very important. Confirm accuracy of tax provisions in financial statements. This is, so we are at execution stage. So confirm accuracy of tax provisions in financial statements. Reperform the tax provisions in the financial statement provided by the LLP. Verify compliance with income tax provisions. You can involve your tax team also to get the comfort on the income tax provisioning done by the LLP. Assess accuracy of deferred tax calculations. Confirm proper filing of income tax returns and tax payments, and see whether the information they are reporting in the computation or the claim they are having regarding the disallowance and allowance are inconsistent with the income tax return filed by the tax payment by the LLP. Evaluate the impact of change in tax laws, if in case any law which is directly impacting the LLP, that you need to consider. Confirm accuracy of provisions for correct and deferred taxes. So for the accuracy, you need to reperform the current and deferred taxes comparison. Of course, the compliance with the tax accounting standards, the ICDS assess compliance with GST laws requirement in case there. So GST RICO is also required. Last but not the least, the consideration regarding the reporting and documentation is maintain detailed documentation of audit planning procedures. Believe me, if not documented means not done. And well planned is half done. So maintain detailed documentation of audit planning procedures. Document nature, timing, and extent of audit procedures performed, and establish clear audit trail evidence to conclusions. So first of all, we have to document the audit planning procedures. Then we need to check the nature, timing, and extent of audit procedures performed in the document, like the purpose of the audit work paper, the source, the conclusion, nature, extent, timing. This should be clearly depicting in the audit work paper. Then establish clear audit trail linking evidence. It's not something like you take the documents from the client and just paste in the audit file and put the audit work paper on the top. No, the documents or the evidence below the audit work paper should be linked with the audit work paper, and document the significant professional judgments. For example, materiality, sampling, your reperformance regarding the estimates, that you need to be clearly demonstrate in the audit file by way of documentation. Ensure documentation support the auditor's report. This is very, very important. Like if you are giving the qualified opinion or the adverse opinion or the EOM para or the disclaimer of opinion, this should be supported by way of work paper. I mean, how and why you have concluded that the opinion should be qualified instead of adverse, or why vice versa. Assess the impact of change in audit process on documentation requirements. Clearly, you have to see the change in the audit process, like the planning methodology changes, sampling methodology changes. You have to document the regions of change and the impact thereof in the audit process. Confirm compliance with the statutory requirements for audit documentation. You have to comply with the standards on auditing and the accounting standards very clearly, and there is no shortcut to it. So you have to document that. Assess the appropriateness of audit documentation tool and techniques considering the size of the entity. You have to evaluate what kind of audit tools you have to comply with. For example, our audit idea or the other uh, uh, tools which are available in the market. You have to evaluate the appropriateness, whether these are relevant or not. Validate documentation of audit conclusions, like I discussed in the previous example, this one, the support, the audited support. Documentation of audit conclusions, I mean, on which basis you have concluded that the qualified opinion should be there, adverse opinion should be there, or the disclaimer of opinion should be there, or there should not be any qualification. I would suggest that in case of any confusion, there should be a consultation process in the form. They can consult with the expert in that particular area to get the another viewpoint so that they can conclude correctly on the audit opinion part. Confirm adherence to disclosure requirements for audit documentation, and assess the impact of change in audit methodology on the on documentation. Follow the audit manual of your firm very religiously to comply with the audit procedures, and confirm compliance with legal provisions relating to audit reporting. Ensure, so this is the archival policy as per standards on auditing. Ensure audit file assembly not more than 60 days and the retention not shorter than the 7 years from the date of audit result. So this was all from my side regarding this key considerations. Let's understand quickly regarding the practical case studies. Okay. So friends, so LLP is having the office on rent from a company owned by one of its partners. The challenge for the auditor is to ensure that the rent paid is fairly and is properly disclosed in the LLP's financial statement. How, I mean, what kind of audit procedures needs to be carried out by the auditor is here. Identify related parties involved in transaction, understand the transaction, rental rates, lease term, etc. Evaluate fairness, arm's length pricing. Document the evaluation, how you concluded that this is arm's length, and the test controls and procedures for related party transaction, whether that party is related or there are other party also who are related, and the disclosure requirements, communicate with management for the information clarification, and document all findings, assessments, and audit procedure performed. See, if you are working, for example, on the related party caption, related party transactions, your audit work paper should have the same conclusion in the related party transactions caption, which is appearing in the audit map, like the summary of all the audit observations. So summary of audit observations should be drafted from the underlying captions work paper. For example, there are observations in the related parties, observations in the property, plant, equipment. So their respective work paper should have the conclusion, and that conclusion should be summarized in the audit map, right? So therefore, the all document all findings, assessments, and audit procedures performed. So the conclusion should be written in the related party transaction itself. Capital contribution discrepancy is another scenario which I feel that we need to discuss. The LLP record showed different amount for capital contribution compared to what partners claim. There is a mismatch in the capital contribution. The challenge is for the auditor to figure out why there is a difference and to verify the accurate capital contribution. How to check? Review the LLP agreement and understand the terms and conditions. Request detailed information from the management, record, supporting documents, etc. Inquire partners for difference. Reconcile the recorded capital contributions with the bank statements. Evaluate internal controls again. Apply substantive procedures such as vouching, and tracing with the underlying documents. Investigate and verify any changes in the ownership structure of LLP. Document all findings, like I said in the previous slide. We have to document and conclude the gaps in the work paper itself. Revenue recognition complexity. The LLP is working on a long-term project on various stages. The challenges for the auditor is to understand when revenue should be recognized at each project milestone, following accounting standards. Gain a comprehensive understanding of the nature and scope of the long-term project. So before we go in deep regarding the audit of revenue recognition, of course, we need to understand the nature and the scope of the business therein. Review the project contract specifications and the relevant agreement to identify milestones and deliverables. Evaluate control and risk associated with each milestone, because based on controls and risk, you can conclude, when to recognize. Apply revenue recognition criteria as per AS9. Ensure collectibility of the revenue is reasonably assured. So the conditions to recognize the revenue needs to be complied with as per AS9, and document your conclusion. Internal control weakness. LLP discovers weakness in its system that could affect financial reporting. The challenge for the auditor is to evaluate these weaknesses, suggest improvements, and adjust audit procedures accordingly. How you will deal the situation. So first of all, understand the nature of weakness, understand the impact on financial reporting, assess existing internal control environment of LLP, focus on areas where weakness have been identified, document the identified weakness and associated risk, communicate with the management of LLP about these weakness. Based on assessment, recommend gap improvements, modify audit procedures to address the specific risk associated with the identified weakness. If you find the weakness, there might be a situation that you need to modify your audit procedures to enhance the checking criteria. If required, perform additional audit procedures to obtain sufficient appropriate audit evidence. Document the impact of such weakness and adjustment on overall opinion, whether to qualify or not. Going concern assessment. Related case study. Economic difficulties raises concerns about whether the LLP can continue its operations. For example, they are in continuous losses. The auditor needs to assess whether the management's plan is realistic, considering financial indicators and external indicators. Understand the economic environment. Review management assessment of LLP's going concern status. Analyze financial indicators and ratios that are relevant to the assessment of going concern. Review cash flow forecast, because management will provide you the financial projections for review, right? So that you need to review. And evaluate the factors, the external factors such as legislation, market conditions, and competitive landscape impacting the going concern of LLP. Engage in communication with the management to understand their plan and strategies. Consider obtaining third-party confirmations or expert opinion if required regarding the viewpoint of management, because management may not be correct in that scenario. So you have to take the consultation from the expert. And same procedure you can do regarding the conclusion in the audit report also. Like the consultation is required from the expert of particular domain. Clearly document the auditor's assessment of LLP's going concern status. Based on the assessment, consider whether there is a material uncertainty related to going concern. As if 570 is there, you can take the guidance from there. But this is very critical. Ownership changes impact is another slide. New partners join in LLP while others leave. The challenge for the other auditors is to make sure that the LLP register of partners is accurate and to assess how these changes impact the financial structure. See, we are looking from the very narrow mindset, if we see the big size entities, there are lots of attrition in the partners, like in the staff. And even the number of partners are so huge, like more than 500, 600 partners are in the LLPs in India itself. So see from that perspective, if there is a change in the auditor, right, and the attrition is high, how the auditor of LLP can manage and what kind of procedures he needs to carry out. So he needs to first of all verify the accuracy of register of partners, confirm compliance with LLP agreement, assess impact of changes on the capital structure, validate documentation for admission for or withdrawal of partners, confirm disclosure and declarations, verify of verify accuracy of partner details in statutory filings, like they are filing with the registrar of companies, confirm compliance with LLP agreement uh, for partner exist, verify document related to change in partner roles, confirm proper documentation or communication of partner changes to relevant authorities, their changes in partner roles, partner changes to relevant authorities, and validate compliance with statutory provisions relating to partner changes. For example, LLP Act, rules their own, and of course the LLP agreement. Next case study, the LLP has investment in stock and financial instruments. These changes for the auditor is to figure out the current value of this investment and whether any loss should be recognized. So this is regarding the impairment of the investment, basically, where the entity is having the complex investment portfolio. Verify the existence and ownership of the investment by inspecting relevant documentation, review the accounting policies relating to valuation and recognition of investment gain and losses, verify the valuation of investment by comparing the reported values with the market price quotations, assess whether there are indicators for impairment, evaluate reasonableness of management estimate and assumptions. So management assumptions and estimates can be wrong. So we have to reperform we have to carry out the audit procedures regarding the testing of the reasonableness of their estimates, and disclosure in the financial statements regarding the investment portfolio. We have to see, perform substantive procedures and conclude testing the accuracy and completeness of investment values. Assess the liquidity and sellability of the investments. So again, document all procedures performed, including the assessment of potential losses regarding the impairment, and conclude the opinion based on the results of the audit procedures performed by the auditor of LLP. So industry-specific compliance, the LLP operates in an industry with specific regulations. The changes for the auditor is to understand these industry-specific rules and ensure that the LLP is following them in financial reporting. Audit procedures: identify and understand the industry-specific regulations like banking, insurance, etc. Review applicable accounting standards here, and identify and understand the regulatory authorities, for example, banking, RBI, insurance, IRDA. Evaluate the reasonableness of management estimates, like we discussed in the previous slide. If necessary, engage with industry experts or consultants. Review previous audits and compliance history. Design and perform audit procedures tailored to the industry specific regulations. Like if you are in the manufacturing of automobile parts, and if auditor of that LLP is following the same practice what they followed in the banking sector, insurance sector, so that may not serve the purpose, right? So you have to customize the checklist based on the industry LLP. In assess the effectiveness of internal controls and verify specific disclosures required by the industry regulations. For example, RBI requires specific disclosures, and the uh, IRDA required specific disclosures. So that disclosures needs to be verified. So this is the scenario regarding the opinion letter matter given regarding the revenue recognition. Basically, the premature revenue recognition is that there are instances where revenue recognized for long-term consulting projects was recognized before the completion of service or the achievement of certain milestones as per the contract. This premature recognition resulted in overstatement of revenue and trade receivables in the financial statement. So in that case, we have to see whether the revenue is recognized based on the milestone defined in the agreement. Otherwise, this may lead to overstatement of revenue. We can't prepone the revenue. Failure to meet revenue recognition criteria. In some cases, LLP did not adhere to the appropriate revenue recognition criteria, such as failing to demonstrate the transfer of control to the client or using inappropriate method to measure the progress. So you have to reperform, you have to check the working of the revenue recognition of the client. For example, if they are in construction contract. So this raised doubts about the accuracy of revenue figures reported. So testing of working of the revenue is required. Inadequate disclosure of contingent liabilities. So the audit team discovered that the LLP had significant contingent liabilities arising from legal disputes, but LLP did not disclose the contingent liabilities, leading to an omission of material information. And uncertain financial impact, had a high degree of uncertainty regarding their financial impact of LLP. Despite the inherent uncertainty, the LLP did not provide sufficient information or make appropriate disclosure about the nature and potential financial consequences of these contingent liabilities. Again, the high degree of uncertainty involved the disclosure or the impact on the liability of the LLP. Again, overvaluation of fixed assets. We have to see, how they have value. Understatement of contingent liabilities, so potential warranty claims. So we have to see, valuation of these contingent liabilities was underestimated. The financial statements did not accurately reflect the potential impact, leading to understatement of liabilities. So we have to reperform the contingent liability valuation and the claims. Similarly, these undisclosed related party transactions was the subject matter of qualified opinion, and non-arm length transactions. So we have to review while doing the related party transactions. So this was all, friends, from my side, though it was too lengthy.
Thank you so much, sir. Can you hear me?
Yeah, I can hear
Can
you.
you hear me? Thank you so
Yes.
much, sir. Kindly, sir, slide down kar dijiye. You're not visible, sir.
Yeah.
Stop sharing, sir. Thank you so much, sir, for wonderful deliberation. And we have gained a lot through your deliberation. And it was wonderful, full of examples as well as full of case studies also. We are having with us two very respected learned members, CA Sunil Garg and CA Jimmy Mittal ji, Honorable Vice Chairman of Batinda Branch. May I request both of them to start with the question answer session. I request Honorable CA Sunil Garg to please start the question answer session with certain questions with you, sir.
Okay. Thank you, Anil ji.
Ji, sir.
Good evening, friends, and Happy New Year to everyone. First of all, I congratulate to Raisuddin Safi for his wonderful deliberation. And he is really Rais in his knowledge and experience of the LLP audit. Very good deliberation, sir. Members
you,
of some, although he has covered all the questions in his presentation, even then some members have some question. Let us take them. Raisuddin ji, first question is, what are the key points to be covered in first audit of LLP incorporation, but the operation have not started?
Okay.
Operation of LLP yet not started in the first year of audit.
So here, the basic, since it's the first year of audit, so I would recommend at first we have a detailed look at the incorporation document of LLP, and the more weightage should be given to the LLP agreement, because since it's a first year, so lots of development might have happened from the partner side. And since the LLP agreement is the bylaws for the firm, I mean, the second document, if we consider after LLP Act and the rules there, so we need to consider the compliance of LLP agreement and the expenditure they are incurring. The objective of those expenditure needs to be incurred because the commencement of business not yet done, as you said in the query. So that's very critical. I mean, LP and this agreement and the statutory filing is must, and the objective of expenditure they have incurred needs to be evaluated in detail.
Right. Right. Thank you. The second question, although he has covered the second question, his PPT, but for the benefit of other who have joined later, I want to ask once again whether both the conditions have to be fulfilled to check the liability of audit. Turnover 40 lakh or contribution 25 lakh.
Regarding the applicability, only one condition is required to be met. Regarding non-applicability, both the conditions required to be honored. So it's like if you want to apply the audit, then only one condition is required. And if you want to relieve yourself from the non-applicability, then you have to do extra. Like you have to ensure that the turnover should be below 40 lakh and your this contribution should be below 25.
Right. Right. So then the third question is regarding what is the capital contribution, whether it is fixed capital contribution or it will include the current capital contribution, current capital.
Both, sir.
Both. Okay. And do the auditor need to be changed in every 5 or 6 years, like in the case of companies?
No. So this is very interesting scenario. Actually, though it's a flavor of body corporate, but there is no rotation period mentioned as such in the LLP agreement, like the 5 years or the 10 years of rotation. But partners can have this rotation policy in the LLP agreement if they want. But in the LLP as such, LLP Act as such, there is no sunset for the auditors removal or the appointment. So even in the interesting of the all the members, like if an auditor appointed for LLP, right? So he will be automatically become the auditor unless until he resigned from the LLP of from the particular LLP, right? Unlike in the companies, we have to give the consent if we are appointed for a year. But in LLP, it's not a case. If you are appointed for a second year, then the third year will be automatically assigned to us unless until the partners ask us to leave or we resign from there.
Okay. Okay. Rashidin, one of our member want to know, in maximum case, professionals and service industry using LLP, as there is less scope for financial expansion like companies. Is there any high scope to resolve it within the preview of financial and accounting discipline?
So I think this is very high level of questions. So I may not be able to give justice to this answer. I mean, to this query.
Yes. Okay. Let us go to next question. And another member want to know, well, will LLP continue to exist if only one partner remain in the partnership, or it has to be wound up?
No. It's a foundation. I mean, otherwise it's not a partnership. No?
Yes. As if there is only two partners, which one is better, LLP or private company? If think future development.
See, though it would be very detailed one, but if we go from the nexus of the LLP origin, so LLP concept comes from the overseas only. So internationally, no one knows the partnership form in India, right? So the Indian partnership form registered under 1932 is not recognized worldwide. So therefore, the picture of this LLP concept come in India, and people start incorporating the LLP because they want to remain in a scenario of partnership firm only. Like they have to pay the taxes and there would be least compliance. But if you ask in a broader sense, like which is better, if I'm getting correctly, so if you are having the business globally, right, and you want to expand at a large scale, then the companies are better. And if on the mid size or you are in the consulting, I think the LLP is better because LLP is having the least less compliance in comparison to the companies.
Mhm. In LLP, we get the benefit of both partnership and company.
Yes,
Because
yes.
it is a simple partnership with limited liability. LLP
Correct.
partnership, yeah. Hmm.
You are right, sir.
Yes.
Sir,
Okay.
now some
Sir,
questions are
may
here.
Yes, sir. Further questions are there. May I request the Vice Chairman, sir, to please, Vice Chairman of
Right.
Batinda branch, please raise further questions, sir.
Sir, now I am asking some few questions are asked by the members. So one by one, sir, I am reading the questions. Sir, first one is my query regarding due date for filing of ROI, return of income, when LLP turnover is below 1 crore, but above 40 lakh. Audit under LLP Act is mandatory. As per section 139(1), if audit under any other law, due date is 30 September. So इसमें देखो सर क्या रहेगी due date.
No. Actually, see, if you ask for the LLP audit, so LLP audit is altogether governed by the LLP Act, right? But the tax audit is altogether independent, no? Tax audit to be governed by the Income Tax Act 1961. If tax audit due date is, for example, but there is a relaxation, like if you are subject to audit under the LLP Act, then you have to go beyond this 30th September holy deadline, right? तो अगर उसमें क्या है ना, अगर आप देखेंगे in case of companies who are subject to tax audit, so there is a criteria like you have to file form 3CA or form 3CB. So form 3CA can be filed only when you are subject to the audit under a specific law.
Right.
LLP Act is a specific law for LLP. So irrespective, their threshold is below the tax audit criteria. Still, their ITR due date would be 30th September.
ठीक है sir.
Yeah. No,
And now 31st October, I
31st
think. 30th
October.
September
Yes.
is for the due.
Yes.
हाँ ठीक है sir. The next question is sir, where in case of new LLP, when the audit is not mandatory, still the auditor needs to be appointed within 30 days of incorporation. For example, if LLP got incorporated on 1st January 2024 and its expected turnover is below 40 lakh, still the auditor appointment needs to be done. Sir, please clarify this question.
No, it's I think the appointment is required before the end of the financial year in the first year.
Okay.
So we have full year, right? So in case of LLP, auditor can be appointed before the end of before 31st March in the first year. In case of second year, auditor needs to be appointed within 30 days from before the end of the financial year.
Okay. यानी कि
So unlike companies, we have 30 days concept. But in LLP, period is the end of the financial year, not from the date of incorporation.
Okay, sir. So the next question is how the appointment of auditors within 30 days from incorporation can be done if the turnover public contribution exceeds their prescribed limit in a later period.
See, first of all, the incorporation is not the criteria for the appointment. Again, the criteria basically, for example, LLP incorporated on 10th of April 2023, then the auditor can be appointed till 31st of March 2024. right? So this is the the feature in the LLP and the companies, like the difference, because companies ask management to appoint within 30 days, right? The board needs to appoint company's auditor within 30 days, but in LLP, from the end of the financial year, you have to appoint, right? And you were saying there was few more query also, no? This?
Yes, yes. The 2, 3 queries are remaining. Should I ask?
Yes, sir.
Yes, sir. So then, sir, you are telling to provide recommendation for improvement. What would be the impact on audit report? In my opinion, the recommendation is a letter of weakness, management letter. I hope I am correct. ये question है.
Yes. See, we absolutely right. Management letter, we cannot be advisor, right? And we should avoid to become the advisor, right? We can't. Of course, we are the make. We have to follow the maker checker concept, no? So maker is the management of the LLP, and we are the checker. So we cannot become the advisor to them. So management letter is to give them the insights of our processes, like what we have observed and how they can improve. It's not something like we will sit with them and we will ask them to change, right? So we have to, recommendation means the 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 information by way of management letter to improve their processes. But we can't become their consultant.
Okay,
Yeah.
okay.
Raisuddin, I want to add one more point here.
Yes, sir.
I am advising to my friends, we should ask the client to engage our another CA brother for preparation of the accounts. We will
Correct,
audit.
correct.
Yes. In this way,
Absolutely.
we will generate revenue for our friends and CA brothers.
Oh, absolutely right, sir.
Yes. If they don't have any capability to prepare the financial accounts, then we should ask the client, please take help of our another CA. CA brother.
Correct.
Yes.
So the next question is that in the verification of opening balances, does an auditor need to get a signed trial balance of last year used for financial statements?
So if last year audit was done and you are appointed as a second year of audit for LLP, I think last year signed trial balance is not required, because ultimately you have to align the audited financial statements with the books of accounts for the opening balance testing. But of course,
Maybe it may be possible last year audit now हुआ without मतलब limit वाला.
in that case, there are extended procedures also required apart from this trial balance. Trial balance is nothing. We have to carry out the inventory count also. Like, for example, there is a company who is in manufacturing and having the heavy amount of inventory. So if you are auditor for financial year 23-24, so open the inventory which is lying on 1st April 31st March 2023, because we appointed for the 23-24. So we have to check the existence of that, because we were not there last year. So we have to do the alternate audit procedures. We have to carry out the rollback procedures to get the comfort on that number,
Okay.
because audit was not there, no?
Okay, okay, right, right, sir. Sir, the last question, sir, existence of approval process for related transaction, related party transaction to be verified. What is the meaning of this under the provisions of LLP Act, sir?
So if you see the LLP Act do not specify any audit related procedures regarding the LLP and all. But the approval is LLP agreements sometimes define the approval mechanism, like in which scenarios, what are the caps, and what are the service lines we can involve our group entities to help us in the business. For example, we are taking consultancy services from our group entities. So for that matter, we need to see whether this should be approved by the designated partner or not, or whether it should be approved by the group of partners or not. Right. So there might be a situation, for example, another partner is having the property which we want to take on the rent, right? The warehouse or something. So for that matter, LLP agreement might define the approval mechanism that if majority of partner, like 75% vote cast in favor of getting the property from another partner on rent, then only this resolution should be allowed. And in the LLP, usually for the related party transactions, they pass the resolution. So they have the meeting of partners, like the companies having the board meeting, no? So the LLPs also have their meetings, and they pass their resolutions for the transactions with the related parties.
Sir, these are the questions. And again, sir, thank you for such a wonderful deliberation, Safi sir. And thank you very much, sir.
Yes, sir.
Baki sir, Mr. Sunil, please.
I welcome, I thanks all the participants for their time. And I also thanks Raisuddin Safi sir for his wonderful deliberation. And one thing I want to add here, in the beginning, he started with question answer format. I think this is the most effective and wonderful way of learning, because by question answer you can get the exact point what you want to learn.
Right.
So that's all from my side, and I once again
Thank you,
want to
sir.
say Happy New Year to everyone.
Yes, sir. Yes, sir. Thank you so much, sir. Thank you so much. First of all, I would like to thanks today's guest speaker, C. Raisuddin Safiji, for his wonderful deliberation. He has covered all the aspects relating to the LLP, with starting with the questions and well as the provisions, as well as he has covered case studies also with the explanation during his deliberation with the help of the case studies also. So once again, on behalf of AASB of ICI, I extend my heartiest thanks towards you, sir, for your wonderful deliberation as well as for your expertise. I also thanks both the moderators of the day, CA respected CA Sunil Gargi as well as CA Jimmy Mittalji, Vice Chairman of Batinda branch, for sparing their valuable time as well as enlightening with their inputs, as well as for the moderating of this today's webinar. And throughout the complete 2 hours, you all were there, as well as Raisuddinji spoke for complete more than 2 hours continuously at a stretch, as well as both the moderators were also there. So thank you so much for your precious time, sir. Thank you so much on behalf of AASP of ICI. Thank you, sir.
Thank you, Anil.
Thank you.
Thank you.
Thank you so
And
much,
once
Anil.
again,
Thank you so much, Jimmy.
and once
Thank
again
you so
on
much,
behalf
Sunilji.
of yes, once again on behalf of AASP of ICI, to all of you, wishing you a very, very happy New Year, and all the participants also, all the members also, wishing you a very, very happy New Year, sir. Thank you, sir.
Same to you. Same to you, Anil.
Thank you so much.
Thank you.
Thank you,
Thank you,
everyone.
sir.
Wishing you a very
Thank you,
happy
sir.
New Year.
Thank you.
Thank you, sir. Thank
And a special thanks to Anilji for giving 110% every time.
Thank you, sir. Thank you, sir. Thank you, sir.
I
Thank
still
you.
remember the time when you were sick at the time of post-COVID. So the situation
Yes,
was very
yes.
tough, and I
Yes,
really
yes.
appreciate the efforts. Done by Anilji. Hats off to you, sir, and
Thank
credit
you, sir.
goes to
Thank you,
you
sir.
and arranging this kind of a topic and the technical session. I never thought of I'll be able to cover this topic in 2 hours. But
Thank you, sir. Thank you, sir.
But बहुत अच्छा, बहुत अच्छा.
Yes.
but the topic is
Thank you, sir.
so vast. I mean, I have to limit myself. But yes,
Yes.
credit goes to Jimmy ji and Sunil bhai, of course, our Sanjeev ji. So
Yes, sir. Yes.
thank you everyone, and
Okay,
thank
sir.
you all
Thank you,
the
sir. Thank you,
participants for
sir.
joining us.
Thank you.
Thank you,
Bye.
sir. Thank you, sir.
Bye.
Thank you.
Okay.